All right, good morning everyone. Sorry about the really late start. Let's kick it off. Had a bit of a issue with my machine here this morning. Okay. Last night's session in the U.S. market was pretty solid. I mean, it's still a bit of a non-event once again. The Dow actually was up 0.5%, but you can see the S&P and the Nasdaq kind of just on a light drift to the upside. Really, I think markets started to gather a little bit of steam after Janet Yellen spoke to Congress, and she didn't come out as hawkish as she possibly could have. It's interesting because a lot of people kind of took the statement as dovish. I mean, you can see in the U.S. 10-year Treasuries that also took the statement as dovish, but I didn't think that it was as dovish as she said, because or as the market necessarily thought it was, simply because she made some comments there. She talked about the changes of language, hinting that when they do change language doesn't necessarily mean that a rate hike is going to come immediately in the next meeting. Basically setting up the stage for them to change language in the next statement, which I think is important. For me, that's a step in the hiking camp direction. So that's anyway, the market took it as dovish, and so it is what it is, and we go from there. But we didn't get a huge move out of the market. We continue to see a bit of a drift. We've gotten into a low volatility environment once again in the market very quickly after being in a huge volatility environment. We had some consumer confidence numbers yesterday out, just fell a scrap. Home Depot traded really well, and Nasdaq up at 15 highs. Greece got its bailout extension, but obviously the big thing was Janet Yellen. If we look at Asia overnight, first day of Shanghai's open, we're actually down about 1%. The rest of the market's up outside of the Nikkei, which is essentially flat. Not a whole lot of leadership there. We had resources that were up a little bit again on the back of yesterday's move after built-in earnings, which really set things on fire. I mean, you saw us up over 6% there in London. I think definitely a surprise to the fact that they were able to continue to maintain the way that they have in this tough environment for the sector. One of the things that we've continued to see is the data out of China obviously soften over time. Last night's number on the PMI number showed an expansion at 50.1, which is better than expectations. It's interesting, kind of almost like the market trades on the expectation of stimulus. Every time numbers come out and they're all right, and the market doesn't trade that well. If the markets come out or if the numbers are poor, then the markets do trade well. So I don't know if that correlation will last for that much longer. All right, this morning we had Grindrod out with headline earnings per share at 1 rand 8 cents. It's dead in line with the guidance and expectation on Bloomberg. Revenue looks like a beat. I don't know, that looks quite far from the number, so I'm not 100% sure if that's accurate. Divvy's better by 2 cents. We've got Murray and Roberts coming out with numbers today as well, and then we've got Target in the States later before the market opens. All right, if we look at market data for today, like we said, we had the HSBC manufacturing PMI numbers out of China a little bit better. We've got mortgage apps in the States at 2. We've also got the national budget here at 2. I think that's going to be really worth paying attention to. We've got new home sales in the States, and then we've got crude oil inventories as well. All right, let's get into the maps. First thing that we'll look at this morning is the Nasdaq, which you can see there. I mean, we've got 1, 2, 3, 4, 5, 6, 10 green bar sessions in a row, which is quite spectacular. This is the one that looks really spectacular. This is a 20-year. Sorry, I can only pull up a monthly on here. There's a couple different ways that we can look at this. Obviously, you can see that we did get intra-month all the way up to 51,029, which we are still shy of. I think that we're very close to 50,000 at the moment. I think that only a few percent away from that high. Without question, it looks like we're going to get there. And it's we showed the chart yesterday on the bubble and of the tech sector back then, and the chart looks very much the bubble looked very much similar to this. I mean, we had from 1909. Just put this in context. In 1909, we were at below 1900. okay, when we started 1999, all right, or right at the beginning at 1999, we were below 1900 on the index. In fact, the end of 98, we were trading at 1500 on the index, and that index went all the way up to over 5000. I mean, you're talking about an index that essentially tripled, in a year and a half. That's just, it's the kind of things that you just don't see ever. You won't see again for a long, long time. And so that is extremity at its most. I think we have had a big move. We've had a move since about from 3,000 in the beginning of 2013 to almost 5,000 now. So it's been a big move. Make no mistake about it. But it's definitely not to the same sort of bubble extent. I think things are probably rich there. I think some of the valuations are a little bit high, but I just don't think that you can call the NASDAQ a bubble. All right, next one that we'll have a look at is the U.S. 10-year, which you can see had a huge move last night. We moved back below 2% on the yield. This has been very important because we've been putting in this consolidation up here between, call it 205 and 215 on the yields. We dropped out of that last night, dropped back below 2%. I think that's very, very important. We'll have to watch to see if it can regain 2 over the next couple of days. We had been kind of on a drift higher in the yield space, even with no news. We'll have to see if that starts to persist again. But either way, this is really important that we're back under 2 here, and I think that's obviously one of the reasons why the market starts to get its boost back to the upside. All right. Next one we're going to look at is ShopRite, which yesterday traded shockingly off of earnings. We've actually got a beautiful little head and shoulder pattern setting up here. As you can see here, left shoulder, right shoulder, and the head here. So this gives us a big target to the downside on ShopRite. I think this is this is a big level because of, this is actually where we broke out just recently. I think that 172 is real interesting. If we can stay below 172, I think the stock can move lower. This is, like I said, this is a big target to the downside, maybe as much as $20. And so just keep that in mind. I mean, this is that projects a target all the way down to here. So I think watch this one closely. It's definitely underperforming its peers, and I think it continues to do so. So just if we stay below 172, I think we've got a chance to move even lower. Another one that we'll show is Sasol. Yesterday, trading shockingly, also dropping what I think was a significant level. We kind of gapped up, and we managed to hold this on a closing basis at about 429 this entire time, over the past month. We dropped it out of that yesterday from a closing basis. I think that we can trade down based on the fact that we took out that close. I'd really like to see us get below 420, or call it where we gapped from at the 422. If we get below that, I think we make a move down to 400 or even 390 very quickly. And the last one I'm going to show is Mondi. We showed this one yesterday before the market. They had earnings out yesterday. We made a nice breakout here on the back of earnings. It had already really broken out, but I mean, it kind of more properly broke out there yesterday above this 228 level. Target is definitely up around 236. We only closed at 230.5 yesterday, so maybe a little bit of meat left on this bone. I don't see any reason why I can't get there. That's it for today, guys. Good luck out there.